The issue is people have this anchoring bias on price. So they think 100 is more expensive than 1. But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number, look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make 1,000,000x returns. The world doesn't work that way.
Bitcoin is back in the spotlight, breaking past the monumental $100,000 mark and setting new all-time highs. While critics and skeptics argue it's too expensive, this sentiment isn't unique. Gold has faced similar scrutiny for decades. But what does expensive truly mean in the world of investments? In an interview with Michael van de Poppy, Raoul discusses how value is perceived in the crypto industry. Powell points out that many investors fall victim to anchoring bias, focusing on the price tag rather than the asset's potential returns. Although a $100,000 Bitcoin may seem unattainable, its fractionalized nature allows anyone to invest a small portion of their earnings or savings. The real question isn't how much it costs today, but what percentage return it can generate over time. Historically, Bitcoin's post-halving cycles have delivered exponential returns, often tripling or more from previous highs. Meanwhile, some investors chase cheaper assets, hoping they'll skyrocket in value like Bitcoin. However, markets rarely operate this way. True success lies in understanding an asset's potential, not just its current price.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Bitcoin is really the anchoring for the whole space. And over time, right, this space is a $3 trillion asset class today. If I extrapolate the trend rate of growth of adoption or price or market cap, you get to somewhere like 100 trillion by 2034, 10 years. So we're only 3% of that journey. So is it expensive or not expensive? It's probably very cheap. And at every point, and I've been around this cycle, I've been in crypto since 2013, everybody thinks, oh my God, I'm paying the high. And when you look back, when I paid the highs at 200 back in, well, it actually went up to 1,000 and went back down again. Back in 2013, I'm like, I paid the highs. And then I look back now and it's 100,000. That's the thing about exponentiality. People don't understand. They see the cyclicality, but they don't understand the secular exponential trend. We see CNBC in the US is actually quite pro-crypto. So they crossed the Rubicon. So that's the kind of boomer investor generation, and they kind of get a lot of exposure to it. The real pushback is from two sources, the Financial Times and The Economist. And because they are the gatekeepers to the centralized world of finance. They are the power brokers of knowledge. It doesn't exist unless it's in the FT or The Economist has an opinion on it. But here is a world that is inverted to what they know. This is a world that came from the bottoms up, from retail, from individual investors, and not from the power brokers and gatekeepers of Wall Street. And so for them, it's a very threat to their understanding and existence. So, you know, what people are getting exposed to is on one side, this traditional, multiple hundreds of years old media, just endlessly snarking and cynical and terrible about it. But they kind of want the attention as well, because they know there's more attention in this space than everything else. But they're seeing the world of podcast, distributed media, new media, all becoming much more focused around this. This is the battle that even Elon is playing on Twitter. It's, that there's a change of guard of gatekeepers. It's gone towards the individual and away from the centralized. And so that is a battle that had to happen anyway. It's the battle we've been having in crypto with all of finance. And we're seeing one by one, incredibly, all of finance caving in and saying, yes, this is a better system. It's an extraordinary thing that I never thought I did think I'd see, but just seeing it play out from 2013 onwards, it's been amazing the power that this thing has done. It's like a supermassive black hole. One by one, everybody comes across into this new world because the returns are better, the opportunities are better, and the system is just more robust. It's just a better way of building finance and the internet. The first one is there is an industrial savings complex whose job is to say, listen, what you need is diversification and you need us to help you manage it. It's far too complicated for you. In return, we'll give you 8 or 9% returns. But they're not understanding that their audience has changed. Their audience is not baby boomers who did pretty well in their careers and had some savings, even though the baby boomers are actually very skewed. There's a whole bunch with no savings at all, because the system let them down too, which was their savings never equated to an ability to retire. The median 401k in the United States of a baby boomer is $150,000. They're so But you see the average is miles bigger. It's over $1 million. Why? Because it's skewed by the super rich. But then when you go to younger people, 8% returns, considering they've come out of university in debt, considering house prices are 10 times incomes or more, have zero chance of getting up the ladder on an 8% return.
Raoul Pal views Bitcoin as the cornerstone of a $3 trillion crypto market, poised to expand to $100 trillion by 2034. He emphasizes the exponential growth often overlooked during market cycles as the key driver of this financial revolution. Pal contrasts the decentralized, grassroots rise of crypto with the centralized and often restrictive nature of traditional finance, which has failed younger generations burdened by debt and low returns. Crypto offers better opportunities, superior systems, and a fairer future, ushering individuals into a transformative new era of wealth creation. Pal highlights the shift from traditional finance, focused on fees over performance, to crypto's accessible and transformative ecosystem. With 500 million crypto accounts now rivaling traditional brokerage accounts, crypto democratizes wealth creation, allowing anyone worldwide to participate. Bitcoin serves as the foundational currency anchoring this ecosystem, which is expected to grow from $3 trillion to $100 trillion as returns stabilize. However, assets like Ethereum and Solana still present extraordinary opportunities for growth. Crypto isn't just about finance, it's a revolution empowering individuals and redefining wealth creation. Let's dive into more insights from the interview.
The boomer industrial savings complex trying to tell them what works for those guys, but not what works for the customer. And the customer, the client, has a very different need. And so what they've done is that trust broke down in 2008 and 2012 in Europe. The trust of banking, the trust of intermediaries, trust of the middleman, trust of the system. And people have taken it into their own hands. And it's not just in crypto. We see the massive rise of retail trading of options in tech stocks. Right? It's the same phenomena. People have had to become more speculative in order to get ahead. It's a real thing. So I think that is an important thing to note. It's all about what's the incentive and for whom. And we have misaligned incentives right now. The boomer industrial savings complex wants one thing, which is your fees, and we want another, which is performance. And they're not going to give it to us because volatile assets don't make as much fees as stable assets in massive size. It's a simple equation. There are 500 million brokerage accounts in the world in traditional finance. That's India, that's China, it's the US, that's Europe. 500 million. There's 500 million crypto brokerage accounts. Already, it's going to dwarf the existing system because it's accessible, it's approachable, there's no gatekeepers. It's everybody with a mobile phone anywhere in the world can use it, whether you're in Nigeria, whether you're in the Philippines, whether you're in Amsterdam. So 500 million. So we're neck and neck right now. And as you say, the companies in the space, if they get it right, it's so much more this higher margin, higher volumes, and secular growth. While finance itself is not really growing. In fact, if you've got friends working in investment banks, they don't get paid as much as they used to. Their job opportunities are less. They employ less people. There's a secular headwind in finance and a secular tailwind in crypto. So I don't think it's wrong to think of Bitcoin as the base currency, but it's like US dollars are the base currency, yet we buy US stocks. Why? Because we want to outperform the dollar. US real estate. If you think of a family office from the Netherlands, that buys real estate in the US. First, they buy dollars and then they try and outperform the dollars. I know people don't think in these terms, but this is exactly what we do. Which is why if you're buying emerging market stocks and the currency's weak, it becomes a problem because the stock may go up, but in dollar terms, it's gone down, or in euro terms. For Bitcoin, that'll become a very real thing earlier. But for the entire space, if it's going to 100 trillion and it's only 3 trillion today, will Bitcoin dominance be 50% of a 100 trillion market? No. Where will it be? Where will it settle as an asset class? We don't know. But let's say it'll have the equivalent or larger than gold whenever gold is at that stage. So let's say it's 30 trillion. So there's the 70% that's going to make an extraordinary amount of money. So I think the S-curve applies to the whole space overall, but the returns are still relatively high to come because we're still pretty early in most of this. And we see that over time. So Bitcoin's returns are coming down. ETH was higher, still is higher, but it's coming down. Solana's higher, but will come down next cycle. Sui or whatever's coming up this cycle, it will still have a couple of acceleration cycles, then it slows down. But, what are we going to argue about? That the returns have gone from 150% a year to 60% a year? I mean, this is la-la land in finance, right? Nobody gets given these opportunities. What is a harder thing is why even start a business? Because I don't know almost any business that consistently generates between 50 and 150% a year returns, and you actually don't need to do anything. You just need some capital.
Raoul Pal's insights seamlessly align with Bitcoin's evolving role as the cornerstone of the $3 trillion crypto market, projected to reach a $100 trillion market cap by 2034. Despite recent price dips influenced by the Federal Reserve's cautious outlook, Pal highlights that Bitcoin is still in its early stages, with just 3% of its potential growth realized. This volatility reflects a broader shift from centralized financial systems to decentralized, accessible platforms, with 500 million crypto accounts now rivaling traditional brokerage accounts and democratizing wealth creation on a global scale. Pal compares Bitcoin to the US dollar, serving as a base currency that anchors a dynamic ecosystem including Ethereum, Solana, and emerging tokens, all promising exponential returns. While recent market fluctuations, such as Fed-driven sell-offs and liquidations, may seem concerning, they are part of the growing pains of an imminent financial revolution. For investors willing to endure short-term volatility, assets like Bitcoin and Ethereum offer unparalleled opportunities for long-term gains. As Bitcoin continues to reshape financial norms, it symbolizes a broader decentralization of wealth and power, empowering individuals to participate in a more equitable and innovative financial future. This isn't just evolution, it's a revolution. Do you believe Bitcoin can achieve the predicted $100 trillion market cap by 2034? What macroeconomic trends or events could accelerate its adoption in the coming years? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.